Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the Australian dollar has attempted to advance through the week and is still currently flirting around the 77-cent handle without any challenges at this stage towards the 77.45-55 level. It is viewed that towards this region should still offer a supply or sell zone, and I do expect to see the market to turn around and look back towards the minor support now holding at 76.75 and eventually lower towards 76.40. I'm keeping an eye on these technicals, but at the moment they're not overly bullish, so I do expect to see fresh advances to foul. The euro dollar overnight edges slightly higher, but still contained within the range of 115.95 to 117.0515. Tonight we do have the non-farm payroll release. This should spice up the market a little bit and overly to a bearish case for the euro. I do expect to see the euro dollar to rally further. Therefore, this should see any advances towards 117.0515 to fail and look back towards the downside with the initial target of 115.5. I still question dollar yen at this stage around the 114 level. We have over numerous times seen the market fail towards this region, as you can see here. Therefore, I still at this stage look to sell into strength and keep stops tight towards that 114.55 level, as a break above there would trigger stop losses to 116. But as you can see, the technical implication is flat. Therefore, I do expect to see a pullback to 113.5 with the support now seen at 112.80. So my strategy is still to buy on dips, but not towards 113.5, more towards 112.80. As expected, the Bank of England raised its key rate by 25 basis points overnight to 0.5% now for the first time since 2007, matching the broad consensus. Although interest rate hikes tend to strengthen the currency, as feared, the Bank of England move was more to a dovish rate hike. The Bank of England indicated that any additional rate hikes would be gradual and dependent on the Brexit. Therefore, the market decided to turn away from the 133 level and look down towards 130.60. At this stage, I am neutral. Reason behind that is the fact we could go lower or we could just see a lot of noise. Therefore, we could get a range of 129.30 to 131.55. So I'd rather sit out for the moment and see how the market trades. The gold outlook still bullish, and I still expect to see further gains towards the upside after recently stabbing a high of 12.84. My target at the moment is at 12.90. With any dips, I expect to see to be shallow now that we've broken out of this trend and look from support around 12.70. The outlook for oil is still pressuring the upside as it now contains around that $55 barrel level. It is viewed that a break above 55.60 would give further scope to the upside and could trigger a rally on towards $58 to 62, as I feel there is a lot of stops above this 55.60 level. But do be cautious. There is a lot of dojis here to suggest that this level could be still indecisive of sustaining, and if rejection from there would look back towards this uptrend coming at 50.85. So that wraps up my daily video. Thank you very much for joining me. I hope you had a great week and a great weekend that's to come.